Hello, everyone. It's March 16, 2021, and you're watching the Awesome10X Global Market Update. Let's begin. Okay, so for those listeners out there, I have a class. It's for the paid members. Today, March 16, I'm going to discuss strategies on how to make money in market crashes and choppy markets. I'll tell you a few previews about this class. But news first, Chinese factories were set on fire. At least 38 got killed in Myanmar's deadliest day since a coup erupted. These are some of the pictures, and you could see that Myanmar is protesting, and protests have been going on for over a month across Myanmar after the military seized power in a coup on February 1, detaining democratically elected leaders, ousting the ruling government, establishing a junta called the State Administration Council. The military, which was headed by coup leader General Min Aung Hlaing, has justified its takeover, alleging widespread voter fraud during the November 2020 general election, which gave Suu Kyi's party another overwhelming victory and dashed the hopes for some military figures that an opposition party that they had backed might take power democratically. The now reformed Election Commission denied that there was any evidence of mass voting fraud, and that it was the only second democratic vote since the previous military junta began a series of reforms in 2011 following half a century of brutal military rule, plunging Myanmar, then known as Burma, into poverty and isolationism. So UN is fearing crimes against humanity, and we actually are in with Myanmar, and hopefully that the military can actually be apprehended on this. A few things to note. Of course, Mr. Jim Cramer did say that there are 5 stages of relationships: denial, anger, bargaining, depression, and acceptance. These are what he believes are the 5 stages of relationships. And so far, the market's relationship is in the denial stage. Actually, if you think about it, to be in the denial stage is actually the lowest losses meter stage. The denial stage might be just a 5% loss from your all-time highs, or at most 20% from your all-time highs. So me personally, I'm fine with taking losses, closing profits, calling a breakup to all my loved ones. For now, I did call a breakup for most of my positions, whether a good name or a bad name. But I'll discuss a few things that I am bullish upon. Twitter is going to be bullish for all-time highs, and I do expect that to happen. You can see from the simple chart from 2014 to 2021 that this is a 7-year nonsense. You can see that it did nothing from $70 all the way to about $15 here. And only last year, when the company actually started to introduce more revenue streams, are the markets bullish on a potential reversal for Twitter. Now, I do believe that you want to buy Twitter for any crashes based on their subscription model and revenue stream. And they're going to aim for doing a similar thing with the Clubhouse. So Twitter is actually going to make its live audio feature available to all of their users starting this April. And a spokeswoman for Twitter said, Spaces will compete with Clubhouse, which is an invite-only audio-based social network startup shooting to fame after appearances from Elon Musk and Mark Zuckerberg. In late February, Twitter was just testing the feature with only 1,000 users, beginning with women and people from marginalized groups. So this is a classic Zuckerberg attack, wherein and Twitter has known Facebook Zuckerberg has always done the CAC strategy, which is conquer, acquire, kill. And Twitter here is actually copying the same strategy of copying the Clubhouse and actually offering Twitter Spaces for everyone who isn't part of the club to be able to listen in and actually use their audio features, wherein you can just listen to people's calls and just peer into what they're discussing. And I think that this is a good thing for Twitter. It will actually encourage more advertising, more bullishness for social advertising for Twitter, and actually additional e-commerce moves for Twitter. So I'm positive in terms of social media advertising. I do want to have and own Twitter. So those who have Twitter, congrats. Those who don't own Twitter, I guess that a good entry price would be any price from about 65 all the way to about 55 or 50. All right. So a few cracks in the scene: BTC's falling down 9%, Ethereum falling down in the last 24 hours, and so does the entire cryptocurrency go. You can see that the latest sell-off comes as a large initial crypto transfer, about 18,000 or up peers, 19,000 BTCs. 19, which is, let's round it up to 20,000 times 50,000, so about $1 billion worth of BTCs moving on the blockchain. And people are speculating that that movement could possibly be a potential selling or something. So the market actually sold this new high from about 61,000, falling down to about 53,000 in a few hours' time. So the long-term trend is still intact. However, a consolidation might also be necessary after an extended run-up. You can see that from March, this was about 4,000. We are hitting 15x here, about 60,000. So it is not unlikely that these extensions, although very bullish, can still consolidate at a deeper correction, whether it be 50K, 46,000, or maybe here at about 40,000. So we'll see how the markets will proceed. But we are seeing some resistances so far here at about 60,000 for your BTCs. And we could see that with BTC, the king falling, so is the case for Ethereum, getting a bit of a sell-off here at about 1940. You do have a lot of supports here at about 1400. It is an extension, and so consolidation is expected despite how bullish you are in the space. Now you can see that Bitcoin Cash is a more decidedly bearish chart with only selling pressure at about 640, 720, and 600. Any drops here at about 500 can take it all the way to about 440 or 400 if the BTCs and Ethereums, which are stronger in nature, do fall and give up some of their gains. Your LTCs are also falling down after reaching a lower high here at about 250 and here at about 220. You are seeing that Litecoins can actually fall back here to about 180 to 140. A 10 to 20% sell-off does not negate the powerful gains that it has done. However, it is still a correction nonetheless. Cracks in the scene. Dash is also cracking down. You could see the 334 and this is 250, a lower high, and now it's 214. Won't surprise it goes down to about 170 or about 10 to 20% lower the next coming days or weeks. You're seeing also flight to safety on your Facebooks, your Microsofts, your Apples, your Charizards. These are your mega caps. You'll notice that although the markets haven't really sold down, you're seeing that they are still just consolidating nonetheless. Your Apple are still below 140. Your Microsoft is still below 240. Your Amazon is below 34. Your Facebook's below 300. Although your Google is one of those uptrends, your Google is steadily here at about 21. So it's either a mild weakness or just a neutral standpoint, which shows us that it's a flight to safety move, as these companies are actually the lowest volatility names that are capable of moving your Nasdaqs, your S&P 500s, whether to the upside or to the downside. You could see that Tesla has already corrected, had gotten a buyer, of course, but it is still below $800. Your Alibaba and Chinese companies are actually getting sold down. Initially, of course, Jack Ma was isolated as being a casualty of the Ant financials and all of the fintechs. But today we also got the news that Tencent is getting a crackdown, and most of the Chinese companies are getting a fintech regulatory bad stuff happening. So it's bad or it's good, depends on the person. I would prefer actually bad news to come in so that I could get some of these great companies, these Charizards and mega caps, at hopefully 25% or 10% lower prices off from their current levels. So your Visas, your Taiwan Semiconductor, your Berkshires are not technology focused, although you could argue that Berkshire Hathaway does own a lot of Apple, specifically about 25% of their stake is Apple. That grew about fourfold. Nonetheless, I'd say that Berkshire Hathaway here is also just a simple flight to safety of most people. When people don't know where to park their cash, they usually just go to mega caps. And so with Dow and S&P riding on a tech rally to close at record highs, I don't see that as a strength move. That's actually more of just a safety flight move. So you could see that there's still a strong movement on your financials, very green. This actually in the last 6 months. Take a look at your S&P 500. In the last 6 months, your S&P 500 continues the gains with a broader base rally. Other than technology, you've got your financials, your energy, your restaurants continuing to the rise of the market, and especially your industrials. When I say industrials, I'm talking about GE, talking about even your aerospace like Boeing, Talking about your Honeywells, your Caterpillars, of course, your Chevron, ExxonMobil, your JP Morgans, and especially with Berkshire owning a lot of these financials, then Berkshire had been a beneficiary, as Berkshire is more or less a neutral. It's neutral. It's got a lot of Flintstones, and it's got a little. It's more Flintstones other than to be honest, it's more Flintstones than Jetsons. So yeah. So what when the markets are actually in a topish zone, you could see that high quality companies are the only ones that money wants to stay, and that's why they are mega caps. If you'll notice the differences of the movements of Charizards and Charmanders, when all you own is a Charizard, it's actually not a bullish sign. Everyone's fearful for their lives, and that's why they own a lot of big caps. And because you actually believe that your little Charmanders are gonna die. Note that Tesla is a Charizard. That's why Tesla is a safe haven move. And all the fund managers you could honestly see from a day-to-day basis are crowding out in a lot of these FAMGAs. And that's actually a very bearish sign. You're so worried of the world that you're only willing to hold a king and a queen and an ace. So the participation of only kings and queens in a bull market is not a recipe for bull market. So in bull markets, you actually own many Charmanders or Charmeleons. In bear markets or closing into a topish market, that's when you actually own many Charizards or you simply go to cash. Or you can short your young Charmanders to extinction if you believe that their business cycles are still in the infancy or early stages mode. You're seeing actually that the eVTOLs are getting a rough time because they're in infancy mode. So a good portfolio, of course, has a lot of Charizards and some Charmanders and Charmeleons. But if you were Ashley here, I think that right now you can only protect your Charmanders and save up a lot of ammunition in the upcoming battles. So that said, we do believe, and I still do believe, that there will be still companies that will continue to go all-time highs. I do believe that Twitter goes $100. I do believe that GM, General Motors, continues going higher. Your General Electrics will benefit on your wind turbines. Your H&M with all their automation, despite perhaps your sales being flat, but because it's cheap for the last 10 years, could still get revalued. Your Herman Millers for your gaming, your Disney streaming, you could argue even your Netflix and your AT&T HBO Max should do well. Baidu is a non-traditional momentum and value play pick because Baidu and Ford and Volkswagen, just like General Motors, they are actually laggards in terms of the electric vehicle moves. So I do think that these names are potentially gonna get revalued by the market some way, somehow. So Volkswagen is actually taking aim at Tesla with their own European gigafactories. They're building half a dozen battery cell plants in Europe and expanding their infrastructure for charging EVs globally. So they're investing in a lot to overtake and speed up mass adoption of battery-powered cars. The world's number 2 car maker, Volkswagen, is actually in the major shift towards battery-powered cars. And they want to have 6 battery cell factories by 2030, 10 years from now. They will either build it alone or with other partners. Our transformation is very fast. They also they discuss this along with other CEOs, whether it be British Petroleum and Iberdrola, in an effort to match some of the buzz of Tesla's Battery Day last September. What these quote-unquote dinosaurs are saying is that, hey, we're not a dinosaur, we're also a Jetson. E-mobility has become core business for us. Volkswagen shares actually rose 3.8%. They didn't specifically say how much they would cost, but it seems as if they will spend at least 35 billion euros or about $40 billion in the next 5 years. They are considered laggards in electrification, and they actually admitted 5 years ago, 6 years ago, even cheating on the US diesel emissions test. They even had to deal with some Chinese quotas for electric vehicles, but now they have the most ambitious program in the industry. So there is a long Volkswagen playing catch up. You could see that in the last 10 years, your money in Volkswagen was practically a doldrum. From about $10, it's now trying to catch up here at about $30, trying to hit an all-time highs, trying to fight Tesla after Tesla has gone from something like $18 to about $4,000. So be that as it may, Volkswagen is a value dinosaur. It's a Flintstone / a Jetsons. It might continue hitting all-time highs regardless of the markets. If you're looking for some alpha position, if you believe that Volkswagen can play a catch up against Tesla, there will be a buyer in your Volkswagen here about $26 all the way down to about $20. So this is almost like a rivalry play against Tesla. And it's the same thing. Your General Motors is trying its best in the last 10 years to clean up their act. And this is why we think that they are pseudo hybrids. We've been mentioning the General Motors at about $40. We actually mentioned to buy General Motors and Ford at about $25 and $6. I've said that they are half breeds. They're not Jetsons. They're not a pure Jetson, but they're not a pure Flintstones either. If this was a war of wolves and vampires, you could argue that the half breeds are, resilient. They are resilient because they are neither a vampire and neither a werewolf. So half breeds could go all-time highs. Twitter is, in a sense, a Jetsons, but also you could consider it the Flintstones because of the value in the last 10 years. They're what you call a 10-year laggard. In a simple sense, if this was simple variable indicator, find a company with a 10-year growth of zero, whatever the price was 2011 versus 2021. If it just grew less than 100% versus an outperformance like a Jetsons, like a Tesla, then you could check whether they are trying to fix their mess in the decade ahead so that they could rally and celebrate their wins in the next electric revolution for the next 10 years. So they recognize that they don't want to be extinct. And so let's give it up for some General Motors, some Volkswagen trying its best to not be a dinosaur in this age. A few things. Tencent, of course, is getting rid of. It's not getting rid. It has already lost from $100 here to about $80 if you're trading the OTC market. I do think that there will be some buyers here at about 75 or even at 65. The lower it goes, the better I'm appetizing about your Tencent. Your Tencent is going down because of that Asian crackdown. Your Ant Financial's got a crackdown. All of your Chinese big tech is getting a lot of scrutiny right now. And when I talk about killing, of course, the best way to kill is to kill a Charmander, not a Charizard. If you're a shorter, I'd say that the best shorts would still be on some of your eVTOLs. Your eVTOLs are a great technology, your drones. However, the revenues are still not there. And with Ag Eagle Aerial Systems not having a clear partnership with Amazon, this has fallen already from $17 to about $6 very quickly. To reduce your shares at about 9, 10, 11, 12 is recommended. And any rallies here at about 10 below or 10 above is actually more of a position to keep on selling. These weak names will continue going down. Weakness breeds weakness, strength begets strength, and this is a weak name. A few things. So what? New York Governor Andrew Cuomo stated last night that your cannabis names will get legalized. Recreational marijuana will have a very close agreement. Well, everybody knows about this. Aurora, CGC, Hexo, Tilray. Right now, these Canadian companies cannot still sell their products in New York. But if they're going to get a legalization on a federal level, then it might be positive to all of these four names. Charlotte's Web is not directly a beneficiary because it isn't selling in New York. And the CBD products of Charlotte's Web are already legal all throughout the USA. So a rising tide lifts all boats. You see CGC, Canopy Growth, arguably in the best position, expanding in the U.S., acquiring acreage, an option to acquire significant stake in Terrace Sand. And as for Charlotte's Web, it's just a rising tide lifting all boats. So there's also reporters saying that in the New York News report, he tweeted on Monday, that there will be a final version of this legalization and it will be voted in both chambers of the New York State Legislature next week. Actually, there's also news that Grow Generation acquired Charnois. So that inspired a movement on cannabis names rallying higher. Take note, though, that these cannabis names are quite toppish. So these good news are pretty much baked in and priced in. Awesome10X will still recommend selling these cannabis names on these rallies. A few things. I like to buy momentum. There's a strategy, momentum, but a pullback of about 50%. It would render some of them cheap. Therefore, Fastly, when it fell about $65, can be sold at about $90. Right now, it's trading at $75. Your Dada, which is a Chinese, similar to Delivery Hero, or similar to your Deliveroo, at about $30, it could be bought, but you want to sell it about 36 to 45. Of course, your Lucid Motors, just like your Xpengs, when it fell to about $22 or $24, was a great opportunity to actively buy it, and of course to sell it at about $30 above. Last night, CCIV was trading at about 28, which is really more of a closing in about 40 to 50% potential range as expected. Your Xpeng is now trading about 35. Do expect some resistances at 45. Huge range on your Xpeng. A lot of buyers residing about 25 to 30, and a lot of sellers residing about $40. So, of course, I also prefer to short some expensive SPACs, 20 to 30 or even $50. Short, expensive, and unsustainable cannabis names as well after this New York passage happens. After the legalization of the recreational marijuana, there will be less catalyst on the way up. A few SPACs that you could short is actually Danimer Scientific, although this SPAC is something that I love the most. 11 rallying to 65, not afraid to say, call a spade a spade. 65 is a high. You've got a lower high here about 56, another lower high here about 48. Rallies about 55 above is actually great. 46, 45 is starting to be a resistance. And where do you want to pick it up? A pickup would be somewhere from about $20 to $30, owing to the fact that biodegradable plastics is, of course, a secular trend. You want to actually short some momentum and expensive names for a 30 to 50% slide. A couple of examples would be the Trade Desk. You want to short expensive digital advertising names. If you could short it about $800, good. 960 fell down here to about 750, rallied to about as high as 880, another lower high. You can see lower high, lower lows. This is a perfect short. You can sell it about 760, sell it at about 800 and 840. Perhaps the buying point is somewhere here about $500 at the very least. Expecting a 50% drop on these names for the ones who are asleep on their charts. You want to still diversify exposure, of course, to growth names, structural growth names. So for those who still believe in growth, and we still believe in them, we're just really waiting for a drop, about a better discount after hitting about 5x, 10x on some of them. I would say that some IPOs will fall, either expensive IPOs like the Coupang. Coupang got a market cap of as high as about $50 billion with only 50 million people. People who are sheep could actually get slaughtered here. Rallied to $70, as low as $50 now. I wouldn't be surprised for a 50% sell-off. Let's take a look at whether we can get in some Korean e-commerce players here at about $35, a better entry price. Of course, a news for you, Netflix is doing a crackdown. Discussed last March 13. It's actually a positive in the long term. It's very difficult to estimate, of course, how many people are sharing their passwords, but it would be a fairly meaningful number. And so this crackdown is a loyalty test. Netflix is very far from needing revenues. Of course, their sales have already grown to about $6 billion, up about 20% from 2019. Netflix is still going to spend another $19 billion on content, and a lot of risks, they say. But this is very different from other service providers. Netflix is a Charizard; it is not a Charmeleon. If they want to make a crackdown on people who are abusing their service, they could. And actually, some people say that it is long overdue. So if you are a subscriber of Netflix and sharing your passwords to somebody, you might actually get a warning by Netflix that you couldn't do that anymore. So for Netflix, still like it, but you could see very clearly that even a Charizard has to consolidate and sleep. Very strong buying action here, about 480 to 450. It means a discount bonanza. Anyone who loves Netflix on a larger crash, if that ever happens, should be a bull on Netflix. Long-term up, very strong bullishness here, about 500 all the way to 400 if you can get in. A few things. There was an Avatar. It got shown. The second James Cameron Avatar is already the all-time worldwide box office hit. They snapped the title away from Avengers Endgame as China's reopening is very much in the session. There was a full day, $20 million on 3-day time frame in the Middle Kingdom, which is China, giving this sci-fi epic bragging rights to being the weekend's global and international box office leader. Avatar once again goes another all-time high. And we are seeing the resurgence of movies yet again. Everyone's going out in China yet again. And Avatar is the Avatar 2, which was supposedly going to be December 2022, is happening already in China. It bodes well for Disney, which is Disney's happy about this. So, of course, we think that Disney should do well in 2021 and 2022. Avatar's box office is actually positive for not just Netflix, Disney, and AT&T's HBO Max. So, very strong movement of Avatar, the king of the weekend. We are seeing signs that the market is very happy with the Flintstones era. Flintstones and half Jetsons and half breeds. I like the half breeds more than the pure Flintstones, and Disney is a half breed that I still do own for some select portfolios. Yeah. So it's a long-term candidate. Any drops of this Disney, of course, is a great company. Nonetheless, it is a very negligible position. In case you were wondering, I could be long, but I'm more cash than long. There are three ways to make money. I just prefer strategy number 2. You can keep on holding and owning extended Flintstones. Of course, you can foresee that airlines will continue to go up. Your department stores will continue to go up. Your 100 million Americans wanting to travel will allow your trip advisors to continue to go up. But that is not an extension that I prefer. We like it since November. You don't need to sell them, but if you took profits on them, it's fine. I prefer strategy number 2, which is wait for the crash on expensive growth Jetsons. So I would, of course, prefer to get the trade desk at about $500 if I could. I would prefer to get UAVS at $5 if I could. So I still prefer owning the Jetsons, but if I could get the Jetsons at about 50 to 70% discount, that is my preference. Now, for the half breeds out there, the half wolf, half vampire, whatever you want to call them, the half Jetsons, half Flintstones will continue to go up. So I still see these half breeds to continue to go higher. The fastest way to make money, in my view, would still be number 2, strategy number 2. But it's really up to you. Either you wait for cash, wait for the Jetsons on a lower valuation. That would be the great ones. So the Magnites would be the best option to get at about $23. As you can see, you could do a twofold thing. You can always make money shorting these expensive names that we love anyway. Short extended companies like Magnite, 64, 56, 45, 48. See a potential drop here about $36 or $30, and then you get back in, and then you do the same. So these are extended moves, of course. $4 to $60 is a 15x move in just 7 months. Now, there's more to discuss. I have plenty of strategies, but that's for the inner circle class. 30 minutes already. Let's ask you if you've got some questions. What do you think of Kupang? Expensive, sell first. Is 2.8 a good entry for Tel? When do you expect a short squeeze for Naked? I don't know about Tel, so I can't say much about Tel. As for Naked, it is a small cap, and I think like some small caps got squeezed in the past. I'm not looking so much on Naked brands. Naked is NAKD. This is a lingerie play, right? So this was a pump and dump. A little pump and dump. So I'm not interested so much. Hi, Nikki. Your thoughts on BNGO? I'm going long-term on this stock. Not a problem if you want to go long-term. I'd prefer waiting at about $6 below. Palantir and Fastly, I like the range. Palantir has a range of $20 to $30. Fastly is about 60 to 90 range. Near 65, go in. Near 90, get out. Palantir would have a seller at about $30 and near. Do you think SPACs, which was one of the badly hit industries in the U.S. market correction, what about it? If yes, do you think it's advisable to stay away from these stocks? The SPACs would have their own sector coverages. For example, Mark Forge, which is a great SPAC. This is in additive manufacturing. I feel as if any drops near about 11 below would be bought by some people. However, it is natural for them to also sell at about $13 to $20. So I think that in the short term, your SPACs will not get a lot of buyers, but you'll get a 50% range if you get in at about $10. So if it's $10 and you just want to sell it at about $14, $15, you could wait it out. Not all of the SPACs would necessarily go down. Usually SPACs have a bottom of about $10. Have you talked about MITC? Nope, I don't know much about MITC. What is MITC? MITC, meat tech. Oh, sorry. Yeah, I remember this. This was the cellular-based meat, right? Whoa. Okay. Thanks for this. Yeah, I like meat tech. I learned about. I heard about it. I think I'm not sure if you told me. This is the Israel cellular-based meat. Yup, I like this. Congrats if you have it. So it's already up 50%. I'd wait it out. Congrats for those who own it. I do like some IPOs. And Meat Tech is one of those companies that I do want to get. This is a Charmander, a pioneer, one of the pioneers in their cellular based meat category. Do like it. What do you think about ADMP? ADMP, if my memory is correct, is something about cancer plays, right? So Adam is pharmaceuticals. Looks like you've got a seller here about $1.40, $1.50. But it's very tricky with biotech. So last night actually check was up 150% and then sold down. So assuming that you did get out at about 150 here, you still lost this 200, 300% move at about $4 last night. So sometimes it's a little bit sad for the people who got out of check cap. This is a colorectal cancer play. But that's that is almost expected on a lot of biotech names. Biotechs would move on FDA approvals, and so ADMP is not going to be charted as much. It's going to be reliant on the catalysts. AMD, ma'am, next. Gaming should perhaps get some consolidation first. Nvidia sleeping here at about 520, expecting AMD to be neutral. You got some selling pressure here at about 95, but you've got a lot of buyer here at about 75. This is neutral here at about $80. I don't see it going up, going down. It's just asleep. So no catalyst, I think, at the moment for AMD. All right. Thank you very much, everyone, for watching, listening, subscribing. Please don't forget to like, subscribe, and share Awesome10X, and see you again tomorrow. Bye-bye. Thanks for the Meat Tech recommendation.